Hello and welcome to the Accendo Trades Group. This is our weekend wrap-up trading plan for July 3rd, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. As you just heard, we believe in trading plans, and if you're going to have a trading plan trading system, you need to be able to answer the following questions. What market are you going to participate in? How are you going to position size into your trade? How are you going to manage your trade? What are you going to use? What locations are you going to use to enter and exit your trades? How are you going to protect your capital by using stops? How are you going to make money and continue to protect your capital by taking profits? And what are going to be your triggers for getting in and out of a trade? The week that was, not a good one. The Dow down over 400, S&P down over 50, NASDAQ down over 100. We really established new lows for 2010. Stiff selling pressure, volume picked up. All 10 of our major sectors declined this week, led by financials, but materials shedded over 6%. Industrials slipped over 6%. So it certainly was not a good week for the market. Overseas news helped with the selling pressure, with China having its economic indicators lowered. Economic data was pretty much bad across the board. Housing data was negative. Consumer confidence plunged. We were expecting 62. It came in at 52. ADP, the private sector didn't create as many jobs as hoped. And then on Friday, the non-farm payroll came in lower than expected. I believe it was down 125. They were expecting down 100. Although unemployment rate did fall from 9.7% to 9.5%, but it's still nothing good across the board on our economic front. No corporate news. As you know, we'll be starting the next round of earnings on July 12th, so we have a quiet week coming up. Remember, the market is closed in honor or representation of the Independence Day holiday, and we really don't have anything on the economic front to move the market. So right now, with us having a bearish sentiment, it's very possible that's going to continue. Now, Friday's action could have been a little bit window dressing as far as people wanting to get out of the market for this 3-day weekend. Coming in on Tuesday, we have ISM services. Again, nothing major. No major earnings report next week. The following week, July 12th, kicks off the next earnings season. And we have a couple of plays that we're keeping watch on. Okay, by now I hope that you guys know that our 30-day challenge has begun. We began on July 1st, 2010, and we do have a free webinar scheduled for next Saturday, July 10th. Again, we have a free webinar scheduled for next Saturday, July 10th at 11 a.m. to kind of review the first week and a half of our 30-day challenge. When you come to our 30-day challenge.accendotraders.com, you can register here. And then it will bring you back to our blog eventually. You can see we have day 2 and today's day 3 going over technical analysis. And what you'll find is that if you click on the links and you're not registered for the 30-day challenge, you won't see all of the content, specifically the videos. So want to make sure that you register for the 30-day challenge, check out our videos, and again, as a community, let's become better traders. Okay, for our YouTube folks, we're going to start off with the S&P 500, looking at the daily chart. Remember, the full version of our podcast is close to 30 minutes, where we go over all the 3 major indices, but because of time, we're just going to focus on the S&P 500. And we can see the confirmation on the daily chart of the head and shoulders pattern. On this side, there's our left shoulder, and then we come up and down, and now our right shoulder, our head. And then now we're forming the right shoulder. We have the neckline we've been talking about at the 10,040th level. And on basically Wednesday of this week, we broke down below that. So that is a confirmation of that level. And we said that that probably is not going to be good if that happens. And so far it hasn't. We have broken below that head and shoulders pattern. It's as we come down to the hourly chart, we can see that that neckline held up as support, and then on Wednesday we broke lower. Now last week we talked about the potential of breaking the 20 moving average. on the hourly chart, you can see that we never really did. Make it a little bigger. Never really did. And as we come down, the 10 moving average became resistance. And then the last hour of Friday, we had some short covering where we ran up to where the 20 moving average, and we fell back down. So certainly we can't feel warm and fuzzy about the market. We can say on the daily chart that our indicators are trying to turn up. We got stochastics yellow indicator. We don't have the double soap yet, but they're showing oversold. MACD kind of showing oversold, wanting to curve back up. And RSI has come all the way back down to the 30 level, also wanting to show a potential to want to turn back up. Certainly we have pushed off of the moving averages. We have some air between our major moving averages, the 20 and the 50. And certainly the market does need to pull back a little bit. We know that next week there's not a lot of news out there, so maybe we will see some short covering, some little light volume buying as we enter into the following week's earnings season. And of course we have the other key event right here. We have the 50 moving average closing below and pulling below the 200 moving average. It's known as the death cross. Now here it has had some impact, but there's been some studies to show that overall it's not as bad as some people make it out to be. 7 out of 12 times did result in a push lower, and half of those 7 were significant. But overall, you know, the market will do what it's going to do. Each time, remember, each pattern is different because there's different traders involved. When I go to the monthly chart, there's 2 things to note. We've closed below the 200 moving average on the monthly chart. And the other thing is, remember, on our free fall, we never really established support and resistance. It was just a free fall. And even as our rally up, we never really had too much swing highs, swing lows. It was just a push up. So the question is there support and resistance in these levels? And it's really hard to say yes or no. Certainly we can see over here, we have some support all the way down in the 800 level. Well, that doesn't do us any good for right now. We also can see a little swing here right where we're at the 10,020 level. So that does do us some good, that there is a potential for us to get a little bounce right here. Like I said, some light volume buying until we can get the third quarter, next quarter earnings season started. But we don't have a lot going on. We have something here again at 97.2. That could be our next level, but we don't have this very distinguished swing highs and swing lows in this push down or in this push up. And when we go back to the daily charts, you have to go way back. You can see we're all the way back into October, and we're at where we are right now. Maybe the next level down is showing something also in the 99 level, but support and resistance will be interesting as we go from here. Moving on to the education portion of our video, we're using Trade Your Way to Financial Freedom by Dr. Van Tharp. And we're talking about biases, and specifically now we're talking about biases that affect how you trade your system. Now, first and foremost, most people don't even have a trading system. And then on top of that, they've never tested it. But let's assume that you've done that. You've come up with your system, you tested it, and now you're ready to trade it. Well, one of the biases that you'll still may have is the tendency to want to override your system. The first time your stop doesn't work, the first time your first profit target doesn't work, you may want to tweak it. But remember, it may work once, but will it work over time? Remember the slippages, the cost of doing business, the commissions, the targets. All these things matter. And if you're going to want to make a change, have a trade journal and write down some things, and then over time you'll notice that something may or may not work. But remember, your system is tested, follow the rules. You making changes can, once again, ruin the system and ruin your results. You guys know about our partners. We've got a great futures trading room, trade at your own risk, results not guaranteed. Another great week using 3 contracts, $100 discount off their normal $349 price, but we can get $100 discount if you sign up through us. We got a great broker because it's a $300 A-mini margin. 20 free contacts if you sign up through us. Again, we got some great relationships. We got a great charting platform for you. And we have a turnkey trading system that's going to be updated here in the next week or so as we finish our 30-day challenge, which you guys know about. Follow us on Twitter. We always appreciate donations because you appreciate all these great free videos. But keep in mind that trading's not for everybody. Trade at your own risk. And remember, YouTube and website folks, download our podcast so you can get the full 30 minutes. This is just the abbreviation of what you can get. Thanks for everybody for watching. Trade at your own risk, and I'll see you guys next time.